Good evening, everybody. Uh, Computer locked up right before. Um, yeah, 2 minutes before I was ready to go. So, anyways, hope everybody's having a good evening. Hope everybody's got a safe evening. I know New Jersey and New York is pretty well still underwater. Hopefully, drying up a little bit today. All right, we are now going into the fall season. Which means we're going to be back here at the desks more often. So we will have probably a few more, or at least Tuesday and Wednesday nights training sessions. And what we're going to be doing is we're going to be concentrating now on not only specific signals like we did a couple years ago, but we're going to do a very concentrated input of patterns. Because I've discovered that people need to see this stuff over and over. Jim, you might have to help Lard with his sound. Oh. Is anybody else getting sound? All right. Jim, are you there? Might have to tell them how to. Okay. All right. Apparently everybody's got sound except a couple. So we're going to be doing very concentrated analysis of specific signals and patterns. And I've discovered in the past that it's not only good to show it and concentrate on a single signal and pattern, but I hear either you, Steve, or your doppelganger. I don't know what a doppelganger is. Your double. Oh. The page is not available. Bill. Oh, he can't hear us. So, anyways, not only are we going to concentrate on single signals and patterns, I can't even say it. Oh, a doppelganger is by an evil twin. All right. But we're going to be concentrating on going through and making sure we see them enough time this fall as we go through specific trainings that everybody becomes very accustomed visually to recognizing when a good signal or pattern is setting up. Okay, so we know there's a bunch of patterns. Fry pan bottom, dumpling tops, cradle pattern, J-hook, scoop, belt holds, gaps. So tonight we're going to concentrate on the J-hook. And when you concentrate on these specific patterns, it allows you to get the exact timing to enter a trade. So the first thing you want to do is pretty much know which direction the market is going. Now that's obviously the same analysis. The charts are going to look the same. Where are you in stochastics? Are you just starting up in an uptrend? Are you continuing an uptrend? Or are you getting toppy? Are you at obvious resistance levels or support levels? And are there signals occurring that might cause a breakout in developing a pattern? So the J-hook pattern is what I would call one of the predominant profitable patterns. Pretty simple. The prerequisite for a J-hook pattern is you have a very strong uptrend. Then you see it pull back indecisively. And then you do a J hook and you go into wave 3. Whoops. So when you see something like this, you know you've probably got more upside. And this is how you can identify which direction the market is moving in general. You can see the buy signal here, the best friend signal. You can see the consolidation. But then when it does the J hook, we've got a pretty good evaluation that this wave right here and this wave right here are going to be the same, which means it's probably heading up to the moving averages. Now, just identifying a pattern is not in itself, I guess, let's see, I'm saying this wrong. Knowing the nature of the signals allows you to see much more clearly what type of pattern could be setting up. So there's your strong price move. There's your pullback. Notice what the pullback looks like. Lots of dojis. So if we know the nature of a doji, which is indecision, basically this is pulling back in wave 2 and indecision. They aren't selling it off with great force. So what do we expect from that? If we watch and see the next buy signal, that pretty much assumes that they pulled it back indecisively and then they started back up again, knowing that the selling wasn't all that fierce, that we were now into wave 3. So we have a very simple parameter identifying wave 1, wave 2, wave 3. That wave 1 and wave 3 will usually be, Leonard, once again, go up to your red X in the circle, up in the top right-hand corner, log off, and then log back on again, and hopefully you get a better connection. So if we know that, I mean, that's a pretty, no sound. Okay. Jim, you might have to help Leonard again. If we know that, we know we've got a high probability trade setup right here, and the trade setup can be exploited by either owning the stock, buying calls, or doing spreads. Anything that makes that next trade move advantageous. Can you explain the waves? Sam, prices move in waves. They don't go straight up. They'll go up, they'll be profit taking, and they'll go up. A lot of people say, well, does this have anything to do with Elliott wave? No, the only thing the Elliott wave showed us was that prices move in waves. Because at some point in a trend, there's going to be somebody taking profits. And then we'll see the continuation of the trend. So since prices don't go straight up, I only go to wave 3 because I'm interested in, that's wave 1, that's wave 2. If I'm buying right here, I'm anticipating wave 3 is going to be the same as wave 1. Now it comes back here, we got another buy signal, and it starts back up. Now I count wave 1, wave 2, anticipating wave 3. So if we know the nature of the pullback, indecisive, and for those of you that are fairly new to candlesticks, the red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. Everybody in the world uses those moving averages to make their decisions about their portfolios, every major money manager. We use it because we can see exactly what their decisions are at those moving averages. Now the T line is this black line. The T line is the 8 exponential moving average, and it has a very powerful ramification. Yep, I'm afraid Leonard will have a problem tonight. Dojis and a pullback show that a J hook may be coming. Yes. That's so. Remember what the nature of a J hook is. Very indecisive. So if we see something pull back, there's a very, oops, I skipped a step here. Very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So the T-line, it has kind of Fibonacci characteristics. It's a natural support and resistance level of human nature. Is the flat line on chart shows entry point. Is the flat line. Oh, right here, that's telling you if it breaks out through there, and notice what it did. It gapped up from there and went through this line. This may be out of place. That should have been the breakout level. I got screwed up a little bit. So if this is your breakout level and you see they're gapping up to get to that level, they're not gapping up to get to a resistance level. They're gapping up, anticipating they're going to that resistance level and much further. So I can be buying right here, not say I, we can be buying right here, knowing that they're probably going higher, and if they're going higher, now we can count wave 1, wave 2, now we can expect wave 3. And I think Jim, I don't know what to tell him at this point. And it works just as effectively on the downside. This is a bearish J-hook pattern. Wave 1, wave 2, and this is where you have the advantage of seeing what is happening when they're taking a wave back up. Look how they failed right here. Right here at the 200 and came back below the T-line. Now there's a very simple rule. If you're in an uptrend and you see a sell signal and a close below the T-line, the probabilities have gone tremendously in the favor of that you're in a downtrend. If you see a candlestick buy signal and a close above the T-line, you've got tremendously good probabilities you're now in an uptrend. When do you enter? You've got two places to enter. One, as you see it's rolling over, expecting to watch to see what's happening right here, or two, when it goes through that level. Same scenario over here. You could be buying right in here, anticipating that you're going to watch to see what happens here. Now, if it comes up here and does a doji or shooting star sell signal, what's it telling you? It's telling you you're not going through. You probably have a double top. You want to be right back out of that trade. Is there a requirement that the moving averages be in order in line to capture a J-hook pattern? No. We're not trading the moving averages. All we're doing is watching to see what the price move is. Everything else is just a confirming indicator. Now, obviously, if you're already moving up, some of your moving averages are already heading up. But a lot of people ask, well, should we be buying something if it's below the 50-day moving average? And again, the answer is we're not trading the moving averages. We're trading the price, the patterns that are created by human nature in the price. So if we see something like this, look at how this uptrend started. Here's your best friend signal and a close above the T-line. What's that imply? That you could be buying this on positive trading. Then look what happens. It pulls back indecisively, and what is the next wave starter? Well, there's your kicker signal, bringing you back up above the T-line. And so when you add that all together, they've pulled it back, they've done a kicker signal back up above the T-line, and we know the kicker signal is one of your strongest individual signals. What do we expect from wave 3 if this is wave 1? more than likely it's coming back up here to test the 200. Not test the 200, it's going to the 200. Would you have closed at the bottom of the J hook? Yes. I would probably have closed, I would have probably have closed here. And then I would have bought back in here. So, and I know this is a question for a lot of people, well, don't you miss out on some profitability? When it closed below the T line, remember what I just said previous, that the probabilities are tremendously in your favor that you're now in a downtrend. Well, as soon as we see a kicker signal and it closed back up above the T line, you can always buy back. I would rather give up some profitability than hang on to something hoping it's going to do this when the next move could be they're gapping it down in this direction. So yes, and I might have closed right up in here because look at your bearish Harami hanging man and then a sell signal. Where do you think the next target's going to be? At least back to the T line. And where are your stochastics? If you cut the chart off right here, what were your stochastics doing? They were in an overbought condition starting to head down after seeing a sell signal right about the same level it topped out before. So, but that's where I'd have probably have sold, and then think about buying back over here when we know a J-hook pattern is setting up. And if we can count wave one, where do we think our next target's going to be? The 200. Now, what keeps us in that trade? The fact that they couldn't close it back below the T-line the whole way up. So this is what I call observe the obvious. We know that when we go up through a resistance level, what's the tendency of human nature? They'll pull it back to the resistance level to see if it's going to act as support. We have that immediate confirmation to say, whoops, there's a left-right combo right smack dab on the 50. And we know the left-right combo is a very strong signal. If they open this positive the next day, we're buying immediately. Because what do we know about a left-right combo? That's an extremely high probability reversal. Now, I'm going to chastise Saki, are you in here tonight? I saw some conversation today in the chat room where people said, oh, I'm not going to chase things. I'm going to let it pull back. Yes, so I didn't want to disagree with you, but think of the rationale of you waiting for something to pull back to where you can buy it. That means it's not a bullish trend, that the bears are still in control. And so if you're waiting for it to pull back where you can buy it after it's broken out, the whole point of seeing a confirmed buy signal is you want to buy that strength because that's telling you the new direction. So the concept of waiting for something to pull back has two fallacies to it. One, it's telling you that the bulls aren't very strong, that the price can pull back. And two, it's telling you you expect that you have an immaculate execution system, meaning as soon as you buy it on the pullback, you've bought it right at the exact time that it should turn around and head right back up again. That's wishful thinking. I'm buying on strength, confirming the signals. So look at the obvious here. They came up through the resistance level, they pulled right back and did a J-hook pattern telling us wave one, wave. How long do we hold on to wave three? As long as it doesn't close below the T-line or if it starts getting too far away from the T-line. Observe the breakout. If you can see there's a J-hook pattern setting up, and once again, you can see there's a resistance level right here. And if they're gapping up to that resistance level, just think what the rationale is. They're not gapping up to get to that resistance level. they're gapping up, expecting that resistance level is not going to act as resistance. So if it's doing that, that's pretty good confirmation. Wave 1, wave 2, wave 3 is now breaking out through that resistance level. Now the pullback is for breakout only. Okay. This chart is what I meant. And yeah, that is if it failed and pulls back, yeah, then you could wait for the J-hook pattern. So this is what we were looking at just this past week. Look at the J-hook pattern that was setting up in Netflix. This is what we call 2 plus 2 analysis, just common sense elements added together. That if this is your resistance level and it's pulling back and it's starting to do a J-hook pattern, what do we expect about this resistance level? It's not going to act as resistance because if the magnitude of wave 3 is this, we're going right through that level, which is exactly, what it did. Now, I've also used this chart for a segue into our big promo tonight, which is we've moved the when to sell and when to go short session from the September 11th to September 18th. This is going to be a full day session. Now, remember, we just did the mini session. Was it last Saturday? I can't remember. That 1 hour session turned into 2 hours and 15 minutes. So the 4 hour session usually doesn't last 4 hours. It's usually going to be 5.5. So this is the type of thing we're going to be taking advantage of or analyzing is if we've got a pattern and we know wave 1 and wave 3 is about the same, we've got a much better view to say, all right, look where it was today and look where it closed. There's your shooting star signal in the overbought area. That far away from the T-line with the same magnitude wave 1 and wave 3 about the same, what's this get you prepared for? You're getting ready to take profits based upon the probability factor that if this opens lower tomorrow, they're starting to sell off and more than likely coming back to the T-line. So this is just showing you that not only do you add up everything of when to be buying, but we can do that same analysis visually when it's time to start taking profits. And everything we do, and I say we, everything I have done when I was learning candlesticks was learning the fact that everything we look at on a candlestick chart is just mere common sense put into a graphic depiction. Is the stochastics level important when trading J-hook patterns because they are not an oversold? AJ, yes, that's the difference between a pattern and a signal. A signal you like to see occurring in the oversold area. A pattern usually is going to break out when you're up in the overbought area. So a J-hook or a fry-pan bottom are usually going to be breaking out with stochastics up here. Sometimes what looks like a kicker initially does not end up that way. So it is prudent to wait for a while before jumping in. Wait to go long. I can't, I'll find a kicker signal, like this one. No. Phil, if you're in an uptrend and you've moved away from the T-line, so this is the opposite of here's wave 1, here's wave 2, wave 3. There's our doji sandwich implying more upside. But what is the most important factor of a trend? The latest signal. So if you're in an uptrend in the overbought area expecting wave 3 to go here, and they gap it down below the previous day's open and start selling it off, you sell immediately. So, and the reason that we'll do that when we go through our when to take profit session, because there's three things that you want to be concerned about. One, if it gaps down, it's not going in the right direction. Two, it used to be I would hold on to this and say, oh man, if they would let me come back up one more time and let me out. And I'm sitting here all day watching, oh, I should have sold here. I should have sold up there, and it's down here. And I sell when it's finally at the bottom of the, at the end of the day. And I'm thinking, why didn't I just sell here? So there's a few things that occur when you sell immediately, because it gets you out of a bad trade, one. Two, it has that money freed up to think about what to do next, and that's the most important thing. Three, it gets you mentally clear to say, well, wait a minute, they're selling this off. This is a bearish kicker signal. Let's start shorting it. So anytime we see a pattern and a kicker signal is killing it, or a gap down, close out the position. That means that pattern didn't work. The pattern is just a high probability expected result. When we see a kicker signal, now we have a new expected result. That's a strong downtrend. So if we shorted up here, or if we sold up here and shorted, where do you think we want to take profits? Where everybody else is watching. So today, 5 closed right here, smack dab. Tom, did you keep are you still in your puts? Right here. Now, we can watch to see what everybody else is watching. We're getting toward the oversold area. They've clobbered this. Is this where everybody's going to be buying? And that's the type of signal we watch to see if it's time to close out that position. Shall I tighten the stop loss in case the J hook breakout is false? Shall I tighten the stop loss in case the J hook breakout? Not necessarily. If I'm long here and I'm up in the overbought area and we're in the overbought area, we're moving away from the T line, I always keep a safety stop at the previous day's open. That we'll be doing on our stop loss session on one of the Tuesday or Wednesday nights here soon. Because if they gap it down below the previous day's low in the overbought area, who do you think's taking control? The bears are taking control. Close it out immediately. Man, we're not even through this. So what we're looking for is a pattern and an expected breakout level. So there's our breakout level, or there's our J-hook pattern. What do we expect? Well, if this is wave 1, wave 3 should take us up through the 200. Comes up here, we're kind of breaking out through now what is a fry pan bottom, and look what's happened here. Now, why is the breakouts of a pattern more relevant when you also have another factor like a 200-day moving average? Because as candlestick investors, we've been buying this one because look at your J-hook Bobble breakout, and we'll get to the Bobble breakouts in a minute. There's your J-hook pattern, in this case starting with a doji sandwich, which implies more upside. And if there's more upside coming out of this fry pan bottom, what are we expecting? A big price move. So why is it more relevant at this level? Because candlestick investing says this is a big fry pan bottom, get ready for a breakout. And now we know that we should be long here, because if it opens positive, what's everybody else watching? They're watching to see whether it's going to break through the 200-day moving average. Why are the 50 and 200-day moving averages simple and not exponential? Good question, Kevin. I'm glad you brought that up. We're not using the 50 and the 200 to make our decisions about what to do. we're using the 50 and the 200 because we know that's where everybody else makes their decision. We're just seeing what their decisions were. So it's not like we're saying, all right, you put the 200 and the 50 on and use those for your trading. You got the 50 on here because we can see what type of signals and patterns are occurring at those levels that everybody else is using. Now, the ones that they don't have is the T-line, the 8 exponential moving average. Nobody has that on their charts, or the amount of people is so statistically small, you would still say nobody. And so we can see exactly what's happening in this price trend, knowing that the 8 exponential moving average is acting like a natural support and resistance level of human nature. So if we know what a pattern setup looks like, we know what the signal setup is. There's our Doji gap up best friend. We would, if we're buying on this day, or even on this day, what's our expectation? If it fails here, you got a double top, you close out the trade. If it goes through, we've got a J-hook pattern working. I'm using daily charts, yes, but candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. If I was trading hogs, and this was my hog chart, I'd be trading it off the 10-minute chart. Or if you want to trade the E-minis, you might be using a combination of the 1-minute, 5-minute, 10-minute combination. Or if you're trading the dollar and you want to be a little bit longer term, maybe you use a 10-minute, 30-minute combination. They all look exactly the same. This could be a 1-minute chart, or this could be a monthly chart, or anything in between. So everybody asks, well, what's the best time frame or best charts to use? That's up to each individual. If you're trading pretty active, you might want to use a 1-minute, 5-minute, 10-minute. If you're only trading a couple, let's say, day trades or swing trades, you might use a 5-minute, 30-minute combination. All you have to do is kind of test to see what fits best for the time frame you want to trade. If you're a longer term investor, maybe you use the daily, weekly, and monthly combination. So anyways, this allows us to anticipate trade setups. So there's your gap down. There's your short. There you're covering your short position. Comes right smack dab to the 50 and does a bearish engulfing and then a bearish doji sandwich. We can start shorting again right here, knowing the probabilities are we're in wave 1, wave 2, going into wave 3, targeting down in this area. So if you know what the signals and patterns do in combination, wave 1, wave 2, how did wave 3 start? With a kicker signal back up above the T-line, implying we're in wave 3. So this one we're in right now, because look what started the uptrend. A big left-right combo, came up through the 50, and what can we assume up here in the overbought area and start to see indecision? Might start taking profits if they're selling it, because where are they going to bring it back to? They're going to come back to see if the 50 is going to act as support. So I might be buying back here, because what did this bullish engulfing signal tell everybody about what's happening at the 50? When they broke through, they consolidated back, and when they started buying, that told everybody, oh, the 50 is supporting now. Now we can start buying again. And we just happen to be in ahead of everybody else. So we recommended, well, that one we recommended based upon that bullish engulfing J-hook pattern right off the 50. Then kind of your double doji setup, which is another good strong pattern. And how long do we hold on to this? Until you see a sell signal and a close below the T-line. If you wanted to, I won't even get into that. I was going to say you could fine tune it. So we recommended app today because there's your morning star signal. There's your wave 1. Look at wave 2 coming back to the T-line and did a bullish engulfing signal and traded positive today. So what can we calculate here? Well, if this is wave 1, wave 3 is probably coming back up to test the highs. So when you know that, you've got whatever your strategy may be. In this case, if you're buying stock only, you see whether that's a good enough percentage move. I think it is. I can't see what it, but that would be a good 15% move. Or you could buy calls. Or if you know this is your target, maybe you buy, which we did today, recommended buying the 80s and selling the 85s. It only has to go up to this level to have the dollar, I think it was $1.55 is where we were buying them, to go to $5. And that's a reasonable move for a J-hook pattern. So it allows you to develop the strategies you want. And so all that comes on the basis that you want to know which direction the market's going, what your stochastics are doing. Is there a resistance level that can be a target? And are there signals that are producing that breakout, creating that pattern? So again, J-hook patterns have expectations. Wave 1, wave 2, wave 3. But even more refined is the Bobble pattern. And the Bobble pattern is just a J-hook pattern that comes up and tests an initial resistance level and fails. Then the price retraces back to usually the T-line. It could be any other moving average, but it's usually the T-line. Then it's followed by another approach back up to test that resistance level. And when it goes through that resistance level, that becomes our Bobble breakout. And essentially it's a J-hook pattern that is much more definable. Where they came up, they failed at a level that everybody was watching. They pulled back to the T-line. They can't close below the T-line, but you can see the J-hook type pattern setup. And then you could be buying right here. Again, the rhetorical question, aren't you in the overbought area? Yes, and that's where you expect a Bobble pattern to break out. Now, what's the difference between a Bobble and a J-hook? Nothing, except for the fact that you can see the resistance level, and not only can you see the resistance level, but everybody else can see the resistance level. So as soon as we see it break out, we can be buying right here with a lot of confidence when everybody else is going to start buying because they can see that it broke out through the 50-day or whatever the moving average that was acting as resistance. So anytime we see that failure and the fact that they couldn't close it below the T-line, and then look at that signal right there. There's your bullish harami telling you the selling had stopped. You could either be, I would probably be buying on this day right here, knowing that the probabilities that they opened up positive above that 200 doing a J-hook Bobble breakout was going to create a high probability of another price move. So we saw that recently on Goss, J-hook pattern, Bobble breakout, and we recommended Excel because right in here, look what was happening. Failed, couldn't, came back up through the T-line, broke out, and so what do we got going on? A fry pan bottom, J-hook pattern. Where do you think the likely target's going to be on this one? This was today's trading. Probably up here to the 50-day or the 200-day moving average. So the reason we want to identify patterns is because they have two major advantages. One, you can see the trend direction with a high degree of probability. And secondly, not only is it going to move in the right direction, but the magnitude of the move is going to be much more powerful or much stronger than just merely an uptrending stock during an uptrending move. So that's your Bobble and your J-hooks. So not only are we going to be doing these type of sessions this through the fall and the winter, especially when it's colder and crappier outside. But we're also going to be doing not only when is it time to buy, but an area that most people don't concentrate on, when is it time to take profits? Do we call kicking signal only if it opens above the 2 days prior candle open? We call a kicker signal, kicker, K-I-C-K-E-R. A kicker signal is when you're in an uptrend and they gap it down at or below the previous day's open and go the opposite direction. That is going to create a strong force to the downside. Catherine, you'll have to bring that up when we go to live charts. Mac, the question is, how can I filter when one is good and then it goes the opposite direction? Because you know what should happen on a Bobble breakout. It shouldn't come back down through that breakout level. Okay, let's see. Oh, so Becky, can you? Well, I think I have it. Here's the link for the full day session, and kind of always want to emphasize. I always kind of make sure you get well more than your money's worth. I'm not familiar that much with using the stochastics. Do we need to wait for lines to cross? No. Stochastics are just telling you where you are in a trend. So just simple logic. A candlestick sell signal in the oversold area doesn't mean very much. A candlestick buy signal in the overbought area doesn't mean very much. A candlestick buy signal in the oversold is relevant. A candlestick sell signal in the overbought is relevant. We're not trading stochastics. We're just seeing where the stochastics are. Does moving average still accurate if you use log scale on your Y? Lena, that's up to you. What you want to use as far as your moving average. I mean, it doesn't take very much to pull up a chart and then move the moving averages and put on some to see. I only use the simple for these because that's what everybody else is using. I want to see exactly what their decisions are at those levels. Does kicker necessarily create a J-hook? No, it implies that if you see a kicker signal back up after it's pulled back a little bit, which one were we looking at that did that? I think it was an American Express? I can't remember. But if you see a pullback and then it does a kicker signal back up above the oh, where is that? I can't. So if you see a pullback like this, indecisive, and then you see a kicker signal, you can pretty much assume there's an uptrend or the development of your J-hook pattern. Because the implication is the kicker signal is usually going to create a strong uptrend, and you can already see that the next wave of a J-hook. Is it good to track what the ETF are doing to track market direction? John, whatever you can do to analyze something that's going to add to the credibility of what the individual stock signals. If the ETF is trading positive, if LABU, LABU is trading positive, I've got a good idea that the biotechs are being bought. If gold is up strong and the gold stocks are showing good signs, that tells me they're buying the gold stocks. So you can, and it's not like you have to do an extensive analysis. You can pull up any chart and almost, once you're familiar with candlesticks, see instantly which way that ETF is going, or that index is going, or that commodity is going, and how that's kind of confirming what the individual stocks in that sector are doing. Can somebody private message me on how to understand the use of stochastics in relation to the signal? You don't need a big explanation, Steve. You want to see a buy signal occurring in the oversold area. And a pattern breakout is usually going to occur when you're in the overbought area. Yeah, so if you saw a buy signal, right here, you probably wouldn't give it as much credence because your stochastics are still heading down. It's when they get to the overbought and oversold conditions that they add the credibility to the signals. Okay, so let's go to some live charts. See how well I did this. Oops. How close did I get? Is that, Jim, how close am I? Maybe a little bit more. All right, that any better? Whoops, got a little bit too much green. A little smaller, okay. A little smaller yet. This is right now, yes, a 10-minute chart on the YMs. So this is the Dow E-minis showing us after hours. It's trading up 11. Move to right. Okay. How's that? You know, I probably should just close the. Gary, we'll look at all of them. All right. Okay, so here's the first thing we want to analyze. Which way is the market going? Well, right now we know the Dow, let's get rid of that, is not going in any major direction. It's actually got a wedge formation in progress. So what do we need to see? Well, it could have been better. We need to either see it break out. If it keeps failing, we're still moving sideways. Now, what was more telling today, and this is why the simple rules of human nature apply to your analysis, look at the NASDAQ. So now you're up here in the overbought area, and they gapped it up yesterday. And these are recorded, so you could always look at the, watch the recording. It gapped up yesterday. Now, what do we know about a gap up in the overbought area? It's start looking for profit taking. So when do you start think about taking profits? This was kind of giving you a prelude to when is it time to sell. Our recommendation on Oscar was based on a bullish flutter kicker, and a bullish flutter kicker signal is essentially a kicker signal, but you can see you had a day where they opened it, closed down here. Let's make this bigger. Then they gapped up pretty much at the previous day's open and did a doji. Now, what do we know about the Doji Rule? The Doji Rule tells us it's going to move in the direction how they open after a doji. So when they open this positive and go this direction, it's a bullish flutter kicker, because if you took out this little flutter, you basically have a kicker signal. And we know the bullish flutter kicker is a very high probability trend reversal. We see the doji sandwich. We know what to expect after a doji sandwich, more upside. And now here's another little tidbit that is useful for using the T-line. Look how they consolidated on, what is today, Thursday, Tuesday, all the way back to the T-line and took it back up. Now, why is that relevant to us? Because nobody has the T-line on their chart. So it wasn't like everybody in the world was watching it come back down to the T-line and started buying because it hit the T-line. They don't have that. That's what we have identified as a natural support and resistance level of human nature. So the fact that they came down here and hit the natural support level and took it back up is just that much more credibility. The bulls are in control. Now, look at the big move we had today on this one. Another doji sandwich up through the 50. But look where we're heading in the overbought area. So what do we get ready for up here? Well, they came through a resistance level. We start seeing if they start taking profits to bring it back here. That's where we want to take profits. Then we want to see if they start bringing it back to the 50. If they hold the 50, then we get ready to buy it back on the next buy signal. So this just kind of helps get you out of positions that are starting to get a little bit toppy. So we can see in HUT how it stayed above the T-line, but now notice what's happening. It's starting to move a little bit away from the T-line. So if we're long on this, where would be the logical place to put a stop? Right here at the low of this doji. Because logic says if they bring it back down through there in the overbought condition, they're bringing it back down at least to the T-line, and we can always see what happens at that level. So anytime we can identify a target, look at the buy signal on LPI. There was your doji best friend. There was your buy. Once again, look at the added confirmation that they came back down, consolidated to the T-line, and took it back up. Just that much more evidence that the bulls are in control. And now they've hit the first target that we would expect up here in the overbought area. So you're in the overbought area. You've moved away from the T-line. You've hit a resistance level. What's the simple solution? You flip to your 10-minute chart. And when your 10-minute chart said, all right, they've hit this level, and now they're starting to trade back below the 10-minute T-line. Let's take some profits. We can always buy it back if it comes back up through the 50-day moving average. All these buy and sell signals, are you a pattern day trader? Tim, no, I don't have time to day trade just because, and that's what everybody has to figure out for their own schedule. If you like day trading, you better be able to sit at the screen and day trade. I've got so many things going on during the day, like analyzing charts, doing the chat rooms, all sorts of things, that I'm more of a swing trader. My trades usually last 2 to 10 trading days. However, if I'm sitting here and it's kind of boring and the day's not doing anything, I might swing over to see which direction soybeans might be trading. Well, it looks like they're trading down. So I go to my 10-minute chart, say, maybe here's a good time to short, and I'll trade it for an hour or two. To be a day trader, you need to have 25,000 in your account, or if you're trading futures, you don't have to have 25,000 in your account. So the answer is, now I'm a swing trader when it comes to stocks, usually in my bigger accounts, and I will day trade occasionally during the day, and it could be anything that has a good chart to it. Let's see, that's not as... So on something like this, on a day trade, when I first see the first sell signals, I'll take profits. And you can see this didn't really do anything. That's hogs. Let's see, which one was better today? I think, yeah, there's your 10-minute chart on cattle. You can see when it failed this level, you stayed short until you saw a buy signal close back up above the T-line. Kevin, hang on to your individual ones. Let me go through the ones that we're trading in right now just to show why we're using the signals and patterns. There's your fry pan bottom, and there's what's driving me. Fry pan bottom. And what did that fry pan bottom do? It came right up through the 50. And look at our doji sandwich right here at the 50. What's a doji sandwich imply? There's going to be more upside. Now our first target was, see if it would fill that gap, which it did. So far we don't have a sell signal. So what do you think our next likely target's going to be? Well, they broke through the 50. Now you think you're probably heading for the 200. CarMax, this is a cradle pattern. In a downtrend, have a big down day, and then look what happened for 5-6 days. Indecisive signals. Doji, inverted hammer, doji, 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 hammer, and it's flat. And then look what happened out the other side. So if you know the definition of a doji tells you there's indecision between the bulls and the bears. If there's 5 or 6 or 7 dojis, that's a lot of indecision. We're looking to see which way they're planning to take that indecision. Well, they took it positive. That's called a cradle pattern. There's your headboard, there's your bed, there's your footboard. The cradle is usually hanging down below 2 trends. And then look what happened afterwards. There's your doji sandwich, telling you there's more upside. Where do you think the target is likely to be? Up here at the 50. So this pattern right here, even if you don't call it a cradle pattern, the fact that you have a series of dojis, that's a very strong reversal because that's telling you there's lots of indecision. Now they've told you what their decision was. Hoya, let's make this bigger. This is an abandoned baby. Notice how they gapped down, did a hammer, and gap back up. You can draw a circle right around this. That's usually a very strong reversal. Let's see, we did app because of the J hook pattern after the bullish engulfing signal right here at the T line. But the question is, well, how accurate are these signals? The signals are relatively accurate. But do they all work? Definitely not. But that's the advantage also of candlesticks. Not only do they tell you when they're working, they tell you when they're not working. There's a kicker signal that we would have bought the next day, yesterday, but it didn't trade positive. Then today, if you bought this, look where it hit. The first resistance level, this is the 34 EMA. I have this on my chart because the 34 EMA works relatively well. And that's when I say relatively well, if somebody says put the XYZ indicator on your chart and you put it on and it doesn't seem to do you any good, take it back off. If it has some relevancy, you keep it there just to get added probabilities of what's happening at those levels. So the fact that it came up here, this is space, and closed here, the rhetorical question is, what is this chart telling you? It's basically telling you they're not going anywhere. If I had bought this today, I would have closed it out. That's that old theme of cut your losses short and let your profits run that every major money manager tells you to do, but they don't tell you how to do it. It's a very simple process when you're using the candlestick charts to say, all right, they've changed the investor sentiment. We should be back out of this trade. Whoops, what did I just do? Sava. People have been asking, is it time to buy Sava? You can see when they gap this down where they've hit. They've hit on a support level. But the answer to that question is, you see anything that's telling you the bulls are in control? None. You just leave this one alone until you see a buy signal. So here's what we're looking for. We're looking for the pattern breakouts. We were in UPST, upstart. Look at your fry pan bottom. And then they gapped it up after earnings. And then look what it's done. This is what we call a 45 degree. There's your fry pan bottom breakout. There's your big breakout. You're in a 45 degree, which has a very simple trading concept. All you do here is stay long as it doesn't close below the T-line. What is a good stop? I get stopped out when the stock suddenly heads down fast and goes back up. If that happens, Cheryl, you should be analyzing what the chart is doing. I get stopped out occasionally, or not occasionally, but a good amount. But if I get stopped out because I've set a stop someplace, and then it turns around and heads back up, I'll turn right around and buy it back. Now, does that mean if a stock moves, I'm going to pick out a figure, 50 points, and I only get 42 points of it? That's fine. As long as I'm in it at the time, every time that I'm in it, it's moving in the right direction. So if you analyze a chart that says this is bullish, and then all of a sudden they whack it down and stop you out, and then they turn around and bring it back up, say back up above the T-line, buy it back. So you got clipped for a little bit, but again, if that stock's going to move 10 points and you only got 8, you got the 8 that was moving in the direction you thought it should be. ALT, there's your J-hook pattern. Let me see if that's... So you can look at this as a classic. Fry pan bottom, came up through the 50. I don't know what that is. Hovered right here on the 50, and then what did they tell you when they were buying here? That everybody could see. Can you remove the private message box off the chart? Jay, that's, yeah, just click on the chart. It should disappear by itself. Oh, I'm sorry, not Jay, Kevin. Click on the chart, it'll disappear. Yes, so here's the pattern. Fry pan bottom, J-hook pattern. That's called your classic pattern. Because what do you expect coming out of a fry pan bottom? A strong price move. What's the prerequisite for a J-hook pattern? A strong price move. So you see a strong price move, profit taking, and then what did they tell you right here? Not they. What can you see that everybody else is seeing? They couldn't close it back below the 50. That means it's support. They're going into the next wave because they're now confident that they're not going to be closing back below the T line. I'm sorry, the 50. This is your 45 degree. You don't know. You're right here at the 50. Now remember, this is your message. Fry pan bottom, they gapped it up, but sold it off. Pretty ugly. But what was the message? The message was somebody was trying to get in with great enthusiasm, and then there was profit taking. So what do we look for? We look for the candle that tells us the profit taking's over and that there's a strong force, because that's what this message was. Now you've moved to a target that you expect to be a resistance level. So if you're long, where would be a logical place to put a stop? Probably just below today's low, because if they're trading back below that level, that means they failed here at the 200. They're probably at least coming back to test the T line. You can always see what it does at the T line and see if it supports and buy it back when it comes up through the I don't know what the answer to that is. This one is a bearish candle. It's red. It should be red. It should be red. I'm partially colorblind. Do I have it? Oops, there. Ah! It was hidden. So there's a bearish engulfing signal. Sorry about that. You do have a 45 degree. You did open right on the 200 and traded off. If this opens lower tomorrow, you take profits, but you get then ready to see if it's going to do a kind of a bobble breakout. Okay, QFIN. Oh, we're way past time. QFIN, the gap up. You just stay long. What's your expected target? The 50. Aspen. These are all positions that have been recommended, and they're long, and you stay long until you see a sell signal. Aspen did a little scoop pattern, Morningstar signal. What's it telling you? They're still in an uptrend and possibly doing a J-hook pattern off the the T line. Let's see. We did this one already. This is your Bobble breakout on Excel. Another little J-hook pattern showing you the T line's acting as support. What's the expected target? The 200. INMB, there's kind of your up through the resistance, pulled right back to the support level of the 50, next wave to the upside. So all these situations are just showing you that you've got higher probabilities of an uptrend. Kind of a fry pan bottom right now on QuantumScape. Now we're not trading this one, we're buying, accumulating this one more for longer term, so we've been buying down here. Now we're waiting to see if they can break through the 50, which would be breaking through this level. And unfortunately, this is more of a story stock that if they announce something good as far as the solid state battery, it's going to definitely rock and roll. So we've got MLCO sitting right smack dab at the 50. Now this opened at 1385 and closed at 1408. Where's a logical place to put a stop loss? Right there. Because if they come back down through there, what's it telling us? They're selling at the 50, they're not going through. SLI, there's your best friend signal that broke the downtrend. Then it did a doji type day today. So what's our strategy on this one tomorrow? The Doji Rule. If it opens positive, it's going to trade positive, especially after your best friend, and then probably a doji sandwich, which means you could get a magnitude move like this, taking you up. This is what the reversals, this is why we study candlesticks to find those strong reversal signals. And we also see when it's time to close out a position. When this opened lower, after not quite a hanging man, remember a true hanging man has a tail that's 2 times greater than that body, but when they were selling it off, where do you think they were selling it off to? Back to the T-line. And then you can just wait to see what happens once it got to the T-line. In this case, they still haven't shown any buying. Lithium was another one that's in the what we call the electric vehicle sector. It kind of had a breakout, kinda. It didn't finish up as strong as it should coming out of this wedge. So if you bought this one today, you know the difference. No, difference. I'm reading difference between best friend and a flutter kicker. We know what this has to do to stay long. It has to open positive and trade positive. If it opens lower, where is it as far as the wedge? It's back in the wedge, you close it out. The best friend signal is a doji. Which one was our best friend signal? Can't remember. It's a doji followed by a gap up. A flutter kicker signal. Bah. Well, for crying out loud. Yes, a best friend signal is a doji followed by a gap up, or a doji followed by a gap down. A flutter kicker signal, I can't remember which one we did. Well, you'd think I have a better memory than this. I can't remember which one the flutter kicker signal was. But a flutter kicker signal is a bearish candle. Then the next day they gap the doji up at the previous day's open. So they've gapped it up back to the open and did a doji. Then the next day it opens positive after that doji. That's your bullish flutter kicker. I'll come across it. I can't. Okay, so it's not only do you want to know when it's time to buy, but when it's time to sell. So when this opened lower and started trading lower today after kind of a dark cloud, not quite a dark cloud, the dark cloud has to open above, dang, I hate that thing, has to open up above the previous day's open, which it did, and then close more than halfway down this candle. And when it traded lower, where do you think it was heading to? Back to the T-line. Oscar. There you go. Thank you. So here's a bullish flutter kicker. A big down day. They gap up and do a doji at the previous day's open. And then they open it positive the next day. That's your bullish flutter kicker. So if you took out this little flutter, you've got a kicker signal. What are they pan bottom? What are they pan bottom? A fry pan bottom is one of the patterns. It looks like a big fry pan. Could this be a potential J hook if it bounces? Kevin, you always had to put the name. This one, you could call that a fry pan bottom, but more that you could see the uptrend started with the flutter kicker, the doji sandwich, a doji sandwich gap up. Mish, we'll take a look. We want to Potentially. I would look at this more as not a real aggressive downtrend, just kind of sideways. Okay. Things work just as well on the short side as they do the long side. There's your gap down. There's your short. There's your darn line that, what the heck? So we recommended going short on weakness because you see the gap down, the failure at the T line, and then the failure to hold the 50. So anytime we can see that force to the downside, like a kicker signal, you can stay short until you see a buy signal to close back up above the T line, with the caveat that look how far away you are from the T line right now. So if they open this lower and trade lower, you stay short. But because you're in the oversold area, if they open this here and started trading down, I'd put my stop at where it opened. It shouldn't come back up through that level. So we saw a good strong buy in Netflix when it broke out, when it did a J-hook pattern. Now we're in the overbought area, moving away from the T line, doing a shooting star. It may be time to take profits. Apple didn't do very much. It's kind of in this slow meandering uptrend. It's in an uptrend, but it's not a very decisive uptrend. Amazon came up through the 50 and pulled right back to the 50. Now we already know what should happen here. If they open this positive and take it positive, what's everybody and their brother seeing? They're seeing the 50s acting as support. Where's your next target? Probably coming back up to fill this gap. No. I've already sorted out the volume. My trading universe is stocks that trade more than 200,000 shares on average each day and trade at least $5 or greater. So the volume is not a concern. A lot of people say, well, don't you want to see volume go up as the price goes up? And the answer is no. Volume and price have absolutely nothing to do with each other. If nobody's willing to sell stock and people are buying it, it can go up on lower volume. Now, if I see a day like this, or this, or this, and there's a big volume spike at the reversal area, that's a pretty good indication that there's been a major change of ownership, that it's probably in a reversal. All right, let's go through these real quick. Tesla looks like it's starting to get a little bit toppy. And NVIDIA also had a nice run. The bounce, there's your bullish flutter kicker signal off the 50. Nice run. And then you saw this Doji shooting star. Where do you think they're likely taking it? Probably back to the T line, which might still be coming up to meet it. We did Amazon, Apple, okay. All right, so when you look at a chart like this, ORGN, there's your Bobble breakout. The implication is the next target. There's your Bobble breakout. So notice when they failed at the 200, they pulled back to the 34, almost to the T line, and the 50, and then took it back up. If you took this 200 out, you'd still have a J-hook pattern. It's just more recognizable that it's going up through the 200. Here's another one that did kind of a breakout J-hook. Today they came back and used it as support. But if this opens positive, what's it telling you? They're not coming back through the 50. They're still in a good, strong uptrend. And what started this uptrend? Here's your hammer type signal, gap up. Whenever they start gapping up, that means they're trying to get in to a trend with great enthusiasm. That's exactly where you want to be. Another one that came up through the 50, held the 50. There's your next likely target. I'll try to go through these quick. And there's another kicker type signal. They down day, then they gapped it up. If they break through this level, this is your scoop type pattern. A flat handle, there's your scoop. And what started the uptrend? This gap up, telling you the great enthusiasm was coming back into this. What one was the other one that was a scoop pattern that we're in? I can't even remember. There's your fry pan bottom. There's your J-hook pattern. There's your doji sandwich. Expect more upside. I've already got that starred. It's probably being recommended for positive trading tomorrow, or buying on positive trading. Tallow, there's your Bobble breakout. Wave 1, wave 2, going into wave 3. CNQ, there's your Bobble breakout. And why is this Bobble breakout relevant? Because look where it's breaking out, right through this level and the 50. That's pretty good evidence. And so look at the whole analysis here. There's your left-right combo, a very strong reversal, off the 200. Took it right up, pulled it back. You can see the T-line acted as support. You can see there's lots of strong buying going on in this one. Was it airy? Yes. There's your flat handle. There's your scoop. And how did the scoop or the buying and the scoop start? There's your best friend. There's your doji sandwich right at the 50, telling you the 50 is not acting as resistance. That candle took you through the handle, telling you the handle wasn't acting as resistance. And how long do you hold on to this? Well, right now, if you're long, you stay long, but you put a safety stop just below the T-line. AQ, that's up to you. Now, if you're buying 20 options at a time, you probably want to see 500 plus. If you're only buying 2 options at a time, you probably want to see at least a couple hundred. Now, the more volume you have in an option, the better price you're going to get, or the faster you're going to get executed. So if you're looking at something that only trades 40 options a day and they're bidding 20 and asking 220 and you want to buy it, you're probably going to have to pay 220 for it, because there's not going to be a lot of people ready to pay you, hit you at 210. So I usually try to keep the option volume up near 600, 800, 1,000 contracts a day, so you can get in and out fairly easily. All right, I'm trying to go faster now. Doju, here's your double doji setup. Double doji is a very powerful indicator. You can see the fry pan bottom. You can see how they took it up, failed, pulled back indecisively. If they open this positive, you buy right away. That tells you the consolidation's over, they're going higher. And Jivo, there's kind of your Bobble breakout. You can buy this one on positive trading. Blade, there's your your J-hook pattern and your doji. So this is where you use your 2+2 analysis. You've got a J-hook pattern that's supported right on the 50. You've got a doji right here. If this opens positive, what's your doji rules tell you? They're going to trade positive. And if they trade positive, what's your doji sandwich indicator tell you? That the magnitude of this candle is going to be the same as this, which means they are breaking out. You've got a J-hook pattern in progress. So anytime you can add multiple factors, the higher the probability you're going to be in a successful trade. Fry pan bottom, kind of junky, but you can see the J-hook pattern setting up on this one. That's SBLK. The wedge breakouts, You can see how there's kind of a wedge here on Unity, moving higher. And Lithium was that same analysis, but it's pulled right back to the top of this wedge. It has to open positive to stay in it. Do investors, traders close long-term positions at a loss coming into the end of a financial year, and does it have an impact on the market? At the end of the year, it's up to each individual as far as what they want to do as far as tax-wise. It doesn't. It's usually a function of if the market has done well for the year, you're not going to see tax selling. You want to take it, flip it over into the next year. If the market has done poorly, you'll see a lot of people selling things off at the end of the year to take the tax loss. So here's kind of your fry pan bottom setup. Same scenario. Right here at the breakout level, you've got a doji, which says if it opens positive tomorrow, you've got a doji sandwich breakout of a fry pan bottom. Fry pan bottom, if this gets moving, where do you think it could head to? Right here, which would be filling the gap. Okay, let's see. A few more on the short side. Making good money on Domo. We're making, didn't have as big a position as I wanted to on 5. ADSK, the doji best friend gap down, you stay short until you see a buy signal. O'Reilly's, kind of a dumpling top. You can be shorting this with the expectation now that they've failed the 50, they might be heading to the 200. And Roku, this is one where if you were getting ready to buy, or even if you did buy, when it came back down through this level, back through the T-line, I told you they were going in the wrong direction, close it out. Now you can pretty much get ready to go short. Do you see fry pan bottoms only at the bottom with stochastics oversold, or will it be a pan fry in the middle? You can sometimes see, which one did we look at? Is it? No. You still have a fry pan bottom. You got a fry pan bottom right here. And then you would consider this a fry pan bottom because it's long enough. Now, if this was very short term, it'd be a J-hook, what we call a slow curve breakout, which are usually very powerful, but that's a whole nother session. So this one, because it's got, you can see the visual fry pan bottom, stochastics coming back up, you can get ready to buy this on positive trading tomorrow. So if you're an options trader, this is what you kind of look for, the setup, that if this opens positive, it's going to be breaking out, at least with the magnitude of that candle, but telling everybody else that it's breaking out, they start piling in. You just happen to be getting in there faster. Okay, that's about all I got tonight. I didn't mean to go this long. Are there any general questions on candlesticks? If not, Jim, do the double line. Just use one per person tonight so we can get done before the now. In 2.1 seconds, do the next double line. If using candlesticks for longer term investment, do I use weekly candlestick signals and patterns? If so, would you pay much more attention to how the stock opens at the beginning of the week and how it closes at the end of the week? For example, close out a position the stock closes below the T-line at the end of the week? Or would it be nice to see how you analyze? It would be nice to see how you analyze and take actions on stocks for longer term investments using weekly and daily. Carrie, we can do that. We'll do that in a like a Tuesday or Wednesday night. I've got that already on the list. I forget how many things I've got on the list. We've got stop losses. We've got entry and exit. We've got scanning, longer term trades, option spreads. So we'll do all of those. But yes, you want to make sure that your daily charts aren't getting devastated, which means your weekly charts will start looking bad. BCTX, you just stay long on this one. TKAT, if this had done this today, I would have had a safety stop at where it opened. Because if it came back down through there, what was it telling us about the 200? It's not going through. You want to close out the trade. DTST, kind of a fry pan bottom. You can buy this if it opens positive tomorrow, confirming that it's breaking out. This one, boy, let's make this a little bit smaller. You're pretty much right here at the resistance level with a bullish signal and then a gap up through the 50. I'd be a buyer of this if it came back up through today's high. ATOS, I would have too. That's kind of, you can see your stochastics rolling over. That, I would just say there's probably better places to have your money right now. That's a good bullish doji sandwich. On farm, you could still be buying this with the first target expectation up toward the 50. JB, that's a nothing chart. If I was short, I would stay short and have a safety stop at the T line. Power, big gap up, look for a 45 degree off of here. OKTA, observe the obvious. There was kind of your resistance level, and when they hit the T line, they took it up. You stay long until you see a sell signal. This TU J hook, not really a J hook. That's a J hook you will see pronounced. There's your J hook. Notice how it bounced right off the 50. I would just stay long on this one. PCH. That's not PCH. You could call it wave 3. Wave 1, wave 2, Bobble breakout, wave 3. And I would expect, at least coming up here to test this level, wave 1, wave 3 should take you up into that range. Well, hang on for 1 second. Okay, So that's going into wave 3. PayPal. That's kind of a nothing chart, especially with the fact that it came back down through the 50. I would have closed this out today and I wouldn't be long or short. Wynn Resorts. Oh boy, if you're long, you stay long, but you put your safety stop just below the T-line. If it comes back down through there, especially now you're up in the overbought area, it didn't go anywhere. Coop. There's another one that if this opens positive tomorrow, the Doji sandwich taking you up further. That's a good looking chart. INVE. Kind of the, let me make this smaller. Yeah, if this opens positive, breaking out through this level, you've got more upside. That's Kirkland's. That's a kicker signal. Open, I think that's a red candle. Bad when you're colorblind with red and green. Gap up, I'd be a buyer on strength. Netsea has been bobbing around. Not anything great. If I was long, I'd put a safety stop just below today's low. It shouldn't come back in that direction. LAC is another one of the mining stocks. It did break out through this kind of wedge. Stay long on this one. NIO. NIO, you could be buying this one. It's just not real. It's got a lot of overhead, so figure your first targets are up here to the moving averages. Then wait to see if they can get through that level. Apple, trying to break out into wave 3. I'd still be a buyer if it comes up through this level. Telling you they're still moving away from the 3T line as well as the T line. Jemiah, having a hard time getting through here. If you're long, it has to open positive and trade positive. If it comes back lower, you're still stuck in a kind of a downtrend. I'd be someplace else. Archer Daniels, that's a nothing chart. So you logically can ask yourself, which way is this going? Nowhere. I'd be out of this if it opens flat tomorrow. The only way to stay in this is to see a strong candle heading up further. Kind of your Bobble breakout, J-Hook. That's a penny stock. You could buy this. I'd have a safety stop at yesterday's close. If it comes down through there, they're taking profits. Myrna. That's running out of steam also. Maybe a mini scoop. You can buy this on positive trading. Just make sure it gets through that level pretty quick. Coles. Coles is right now nothing. But I wouldn't be long or short. But if it opens and trades positive, you can see the pullback was very indecisive. But it needs bullish confirmation. Stay long on this one. Notice how it used the 50 as support. Prague. You can buy it as long as it stays above the T-line. PLTR, somebody was asking if this was some sort of breakout. Not really. It's just continuing a slow uptrend. When it broke out through this level with a doji sandwich, that made it more compelling. 3D, you could buy this one on positive trading, but it has to open positive and trade positive. If it opens lower and starts trading lower, that closed out means you're still stuck sideways. AFRM had that big move. Right now, you're probably at a 45 degree. Not so much a J-hook as probably this direction. Telling you they aren't selling it off. Visa, stay short, but now watch to see what they do here at the 200-day moving average. Up, you can buy this one off the Morningstar signal on a positive open tomorrow, Doji sandwich. That's called your McMuffin, a Morningstar signal followed by a Doji sandwich or your morning sandwich, which is double confirmation the bulls have taken control. This one broke out through this resistance level. You stay long, but it probably put a stop at the halfway point of this candle. They shouldn't be bringing it back down that far. And square, nothing. No direction. I wouldn't be long or short this one. And be big, that's not good. If this opens, if you're long and they open this one lower tomorrow, I'd close it out. That's probably a good indication they're bringing it back to the test of 50. You can see there's not a lot of strength. And support, that was your Doji rule, that if you had stayed long, this day needed to open positive, trade positive. The fact that it closed in this direction told you the bears were back in control. But this would be a perfect example that if you were long and this stock, if you bought it in here, which would be a good fry pan bottom breakout, and it eventually moved up to the 60 range, go to your 10-minute chart. Get ready to take profits, because look how far away you were from the T-line. Zev just isn't able to get started. This one has to open positive and trade positive tomorrow to stay in it. And OXBR, nothing real compelling. If you like it, you can be buying it. Just not real dynamic. What was it? Ox. All right. ON. If you're long, you stay long. If you're thinking of going long, I'd wait for it to break out through this level with a J-hook pattern confirmation. BXC. If you're short, you stay short. And I'd even be willing to short this on weakness with the expectation of coming to this level and then possibly this level, and then your gap is right down here at this level. American Tower, you stay long on this one. Kind of broke out through this area. Stay long until you see a sell signal. Pet V, oh, pshaw. For some reason that's not coming up here tonight. What's the symbol for Expedia? A nothing chart. Which direction is this going? Right now, no direction. If I was long, I would have closed it out today. If you want to go short, wait for further selling. Pfizer, nothing. If you had been short, I would have covered it today with the Morningstar type signal bouncing off the 34 in the oversold area, but I wouldn't be going long. It's got potential J-hook, but you definitely have to get back up above the T-line. These are tough to trade, TN. If I had been short, I would have covered it on this day, but I probably wouldn't be going long on this. I wouldn't be long or short. Peach, I buy on positive trading because of the Bobble breakout. Yes. And Cassie, nothing of any great consequence here. If you are long, it needs to open positive. If it opens lower, you're kind of stuck. If you're going long, I'd buy it above these levels. Apple, why did yesterday's shooting star not concern you about a reversal to the downside? Because you're not in the overbought condition yet. So a signal is not a signal unless it's occurring in the right condition of the trend. This has just now started an uptrend, so it could have been a concern, and it still might be a concern that it did a doji today. I probably wouldn't want to see it trade back below these levels, because if it came back down through there, what's it telling you about your trend? Not very strong. Is there a point? Yeah. If this sold off again, back below the T-line and started heading down into this range, I'd close it out and wait for the next buy signal. But we're buying this more for the longer term, so this was kind of a safe place to be buying it down here. And the longer term is on the basis that any good positive results announced could, did I do that right? VPRX, that's not working. Any news on this one, on QuantumScape, could send that up to 30, 50, 80, 100. Again, Tesla, you can see, is running out of steam. Spinning top, doji, shooting star. If this opens lower tomorrow and I was long, I'd probably close it out and see what they would do once they came back to the T-line. This one is a nice bullish chart, obviously. But now you're in the overbought condition, so you always put your safety stop right there. If it's going higher, good. If it starts taking profits because of that gap up, at least keep your safety stop in case they gap it down. But if they did something up here where it showed some weakness, I'd be taking some profits. VRPX, you can stay long as this stays above the T-line. Okay, that's way past our bedtimes. Right now, these markets are getting a little bit testy, meaning you're in a wedge sideways on the Dow, and the NASDAQ is showing a little bit of weakness up here. Got doji, gap up doji. It closed below where it opened today, which, even though it was up 21 points, we could see there was selling going on. So that's the advantage of the graphics, the candlesticks. So with that, everybody have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.